Hi, this is PC and I'm going to talk about the most important strategy for investing in crypto or stocks or anything else, and that is DCA in, DCA out. So DCA means dollar cost averaging, and DCA in means that you dollar cost average into the investment and you dollar cost average out of the investment. So basically it means that you have a certain amount of capital. So for example, you want to invest like $1,000 into crypto, for example into Ethereum, and basically you don't want to do it at once. You want to do it over a period of time because you're not sure about the good entry point, good price for buying Ethereum. So for example, like right now in a bear market, so what you would do is basically, for example, each second day or each week, every Monday or every Sunday, or maybe once the first of each month, you would buy a certain amount from that. So, for example, you want to DCA in over the span of the next 3 months. You have $1,000, and basically you say to yourself, okay, I want to DCA in over the next 3 months, basically paying the constant amount every time. And then you try, for example, buying every week, you buy something like Ethereum for $100, which basically would give you something around 2.5 month to deplete that capital, to deplete $1,000. So basically, you're buying for $100 every week. $100 of Ethereum, and you don't really care about the price. You don't really care about the market right now, because in the end, you will have the average. You will have the average over the span of those 3 months, basically. And it works marvelously because it allows you to not think about the price, and at the same time you're not really far worse from the average of people investing, because it's super hard to catch the top or catch the bottom when you're investing. So the same strategy works for going out of the investment. So say you want to go out of the investment in the next bull market. So when people are super optimistic, super hyped, they saying again that it's a super cycle, it never ends. That's probably the best moment when you actually sell your investment. And the best way to do it, especially if you don't know if you're on the top or not, is saying again, okay, I want to exit the position in the next 3 months, and basically I will be doing that every week. So every week you will be selling portion of your investment. So again, if your $1,000 is now $10,000, then basically you'll be selling like $1,000 of worth of Ethereum each week. So that's percentage of what you have in total, and basically you will be exiting your investment. So this way, again, you don't really have to time the absolute top of the market. You're happy with the general vibe that probably it's a top of the bull market, and you want to exit the position right now. So yeah, it's super simple in the end, but it's the best and the easiest strategy to start with, especially if crypto or stock investing is not your full-time job. You don't really have time to stare at the 1 minute charts every day and analyze everything around it. Then basically that's the best thing you can do. It works well, as I said, in crypto. It works well in stocks. Maybe in crypto it's a little bit harder sometimes, especially if you invest in smaller coins, which can just totally disappear. But if you invest in the main ones like Bitcoin and Ethereum, it's perfectly fine and it works well in the long term, or at least it works for the amount of time you want to hodl it for. So hodl stands for hold, and basically this is the time horizon you want to have your investment for. So that's one of the most important things also when investing any kind of capital, is you should have a time horizon in mind. That can be like a couple of months, that can be a couple of years, that can be a couple of weeks, or decades. But in the end, you need to say to yourself, what's the time horizon you're looking for. That time horizon, of course, can be dependent on the macro event. So you're saying something like, for example, with crypto, you don't know exactly when the next bull market will be. You expect your thesis is that you expect there will be a next bull market, and you want to exit your position at the next bull market. So when everything returns to the bull market and you see all the optimism on Twitter and other crypto channels, and basically that's the moment when you exit your position. So that's like the macro triggered exiting strategy here, and it's also fine. But it's good to have defined that a priori, because then you know exactly when you want to exit the position. Of course, you can always say it's infinite hold to your diamond hands and blah blah blah, but it's not the most optimal strategy ever, and it's not how you will make money on this market ever. So yeah, DCA in, DCA out for the best strategy to invest in crypto and stocks and much more. I'll be talking about other strategies as well. I'll be talking about other advice on what you can do. Of course, all that are suggestions. I'm not a financial advisor. I won't be recommending any single coins because, yeah, as I said, you should always do your own research regarding coins or projects and so on. But I'm happy to share the knowledge I have regarding the strategies. Plus, I'll be covering some of the cool projects in the Web3 or Metaverse to let you know what's going on. So yeah, subscribe to the channel and see you in the next episode.